Hello everyone and welcome to your Onchain update for the 13th of July. So we've seen some pretty hostile regulations in the US over recent months, and naturally that's going to put a little bit of a damper on things, and we certainly saw a fairly sizable chunk of that. Now, the BlackRock news and all this ETF, and I mean, can you all remember when Binance was blowing up? That was a couple of weeks ago, right? Gary Gensler was cracking down on every exchange under this. I mean, that was a couple of weeks ago. I don't know about you, but it kind of feels like a distant memory at this point in time. And we're starting to see that very same logic showing up in the data, which is kind of interesting. So we're going to start by having a look at some regional type metrics and then dive into some supply-based metrics. So what I want to look at today is kind of the regional supply and just understand a bit more about these mechanics with what's going on with the US, some of the changes and just shifts that are starting to take place. Very, very early, but something to just pay attention to. We're going to spend a bit of time looking at HODL wave analysis, just understanding kind of the spending from, older coins down to younger coins, just kind of getting a bit of a feel for where we sit right now. And I want to close out by looking at 3 different versions of the sell side risk ratio, which I think is a really, really powerful tool and works really nicely to kind of bring the realized profit and loss side of it on the back end of our HODL wave analysis. So we'll kind of merge those two together. Okay, so as I mentioned, the first thing I want to look at is regional price, regional supply. So really what we saw at the start of this year was quite a bit of hostility coming out of the US. Now, just for a bit of context here, what this is looking at, it basically splits the world into 3 zones. America in blue, Europe in orange, and Asia in red. And basically it's looking at those different 8-hour time slots and how much of the price up or down is like, let's say over a 24-hour period, let's say there's more sell side activity going on during Asian hours, this will show up as a negative print in red. And it's all relative, right? Because price can only go from A to B. So let's break up that A to B into a percentage, how much of it was occurring in those different 8 time zones. And the exact same you'll see in the next couple of metrics, which looks at from a supply basis. Now, let's zoom in. If we look at our recent, so kind of the US market, you can see kind of started this rally. That's where a lot of the momentum came from during the early part of this year. A lot of the upside price movement was coming from the US. Now, what we then saw is that during that kind of middle period, so kind of in between from say February through to about April, May, that kind of zone, even through to June, you could say, this was all pretty flat, right? The US really had a fairly light touch, and we'll see an even more dramatic view of this in the supply side. You can see here that we've started to get the US picking back up. And actually, if we zoom in now, the colors are probably going to be all wacky here. Let me just take out some of these. You can see that the US has come screaming back over recent months. You can see they actually started picking up into, this is when Binance and Coinbase were actually getting those lawsuits kind of lobbied against them, right? So the US started to pick up, even though price was coming down and that regulatory heat was coming in, and really entered the fold during that rally back to 31K. We can actually see that the Asian market is also picking up some of that steam. And remember, this is all a relative game. And if I'm not mistaken, Europe has also joined the fold. So we now essentially have a bit of engagement from all corners of the world. This is positive. Now, again, this is a single kind of metric, but it's just trying to set the scene. Now, if we look at that on a supply dynamic type basis, now this one here is looking at, again, it's a relative game. So if you were to sum all of these traces together, you would get 0. So the best way to think about this chart, over the last 12 months, which cohort has been growing or decreasing their share of the Bitcoin pie? There's 19.42, whatever it is, million coins. In fact, my block clock says 19.428 million BTC. Basically, this is saying of that pie, how much of it is moving towards US, Asia, Europe, so to speak. Now, Europe is really not doing very much, right? Kind of interesting that Europe's just not really participating on a supply side. Asian markets have been the largest accumulator of Bitcoin for some time, but this kind of peaked out very, very recently, June 9th. So this is kind of getting in towards the Gary Gensler era when things started to clean up. BlackRock had probably made their announcement within a couple of days, and you can see that we've started to get that reversal backwards. Now, again, this is very, very early, and I think we touched on this when it first started, but aligned with price performance, you've got a potential shift in what was otherwise a serious ceding of ownership by the US. So it's kind of interesting, but basically the US shrunk their share by about 11%, and Asia picked up the majority of that, with Europe picking up just a little bit. So it kind of shrunk their overall year-on-year balance by 11%. So anyway, green shoots, and in many ways, it kind of, a lot of this regulatory stuff is a little bit in the rearview mirror. Kind of funny how narratives can shift on such small events. Well, they're not small events, but it doesn't take much. And this is the last one I want to touch on. So looking at the different exchanges, so we've got the Krakens, the Geminis, and the Coinbases. That's what we call the US exchanges in the blue. And then I think it's Huobi, Binance, and OKX are the biggest offshore exchanges. All three of these, all six of them are seeing outflows in terms of their overall exchange net flow. So we are now seeing outflows coming out from the Coinbases and the Geminis and the Krakens, and we've seen a fairly substantial amount of outflow led by Binance, obviously, because there still was, a couple of people spooked about that, but they still have stacks and stacks of coin. So overall, this looks like a global thumbs up. Right? At the end of the day, it kind of looks like there's a bit of global acceptance. Now, I don't know whether that's getting to the point where everyone's on the right side of the boat and everyone's going, oh, it's going up. At some point, that's going to happen. I don't quite yet have a feel. It's a pretty hard market to read at the moment. Whether we're getting to that like everybody's bullish type scenario, I don't quite think we're there yet. I still think up feels a bit more painful. But at the very least, it looks like there's support coming from a pretty global standpoint here. Okay, now moving into some HODL wave stuff. Now, I actually want to start with these. This is just a really nice way. First of all, I just think it's a really cool chart. But this is basically looking at, you may have seen the URPD where we look at the bar chart, shows where all the coins are. This is it plotted at every single time slice with the HODL wave colors over the top of it. So really some big picture takeaways here just to kind of orient what the hell we're looking at. The red means that there's a lot of hot supply, coins that recently transacted. When does that show up? As we break the all-time high into the peak. This is literally smart money. They just don't sell, right? They just don't sell. They sell after the all-time high, right? Let's go to the full-size one. The smart money sell. Look at this. It's just like clockwork. Here's the previous all-time high. Coins get older and older. Even guys who bought the top, coins get older and older and older and older. And then bang, they sell into the rally, right? Same thing. They sell into the rally. The hot supply comes when we break the previous all-time high. It's kind of wild. It's just Bitcoin is this, it's this beast that just does, these patterns over and over again. Now, the other big takeaway here, these dark patches, right? You can see obviously there's colors all through it, but some of these lines are really, really thick. These thick lines here, by the way, these are like getting to 10-year-old coins. These are probably big chunks of lost supply or someone who's just got some seriously firm hands, right? But you can see these dark patches show up around capitulation lows, around these big kind of zones where price spends a lot of time. 2019. This is what gave rise to our bull market. This is the hodlers stacking sats religiously. See how there's basically no red? It's only people buying and accumulating in this zone. Kind of looks a little bit like where we are, right? By the way, there's a lot of people who bought the top. A lot of people really did buy the top up here in that previous cycle, and a lot of people bought this bottom. So we're kind of in between those two different levels, but you can see how dense this is, right? This is good stuff. This is what you want to see. There's a lot of resistance up here, right? These guys up here are still kind of waiting for their, they're into the, what is this, 1 year? Must be 1 year to 2 year almost. Probably 2 year by this point. Anyway, these guys here, this is essentially where we are. This is dense. There's a lot of supply down here. That's the bottom getting put in. Right? Kind of amazing how we can visualize this stuff. It's great. Now, to kind of amplify that, if we move across to our realized cap HODL waves, I actually had a question about this the other day. What's the difference between realized cap HODL waves and the HODL waves? Essentially, it's what denomination. The standard HODL waves are in BTC format, and you will see that the 10-year-old supply is a big purple blob. I don't really care about coins that are 10 years old. They don't really matter to me. They're not really important from an economic standpoint. Realized cap HODL waves is USD denominated. It's going to basically show you of all the wealth invested in Bitcoin based on when coins moved on chain, what's the age distribution. So therefore, Satoshi's got 1 million coins, but they're valued at 0. So they disappear from this chart, right? And you'll actually see, let me turn on the 10-year-old supply. If anyone can see it, you get bonus points. That's because it's basically non-existent. There's no value in it relative to everything else. So there is, in fact, the 10-year line is turned on in this chart. You just literally can't see it. That's the difference. So what's really nice about this is you can see we've got a little bit of an uptick. Now, this is looking only at coins up to 6 months old. Now, you'll know I like to do this kind of binary system. Coins can only be younger than 6 months or older than 6 months. They can't be both. So coins, if they're not in this category, they're in the older category. Yep. So let's think about that from another perspective. If hot supply goes up, which it does near cycle tops, that means that, if young supply, hot supply goes up at bull markets, this is those red patches we just saw, that means that old money is selling because they're going from old to young. Wealth is being transferred up to a high cost basis, increasing the risk of some kind of a downturn, top heavy market, so on and so forth. You can see that hot supply swells at the top. This is, it's heading higher, but we're pretty much down at 2015 lows. We're still not even at the 2018 bottom. We're still below that in terms of the amount of wealth that's held in these like hot coins. There's just not much for sale. Hodlers be hodling. They're not going anywhere. It's really, really constructive. So at the very least, even though the world's a bit chaotic and price could go all over the place, recessions could be around the corner, at the very least, my big picture read is that what is below us, kind of the 30K down zone, that is some dense supply, right? There's a lot of people who accumulated a lot of coins and saw a lot of value down there. And I do believe it will, as a result, provide a fairly robust support. I think that to me, it feels like a really nice foundation, and we're just not seeing many people changing their opinion on that being the case. People still see value here at 30K. Even if the world's a bit volatile and chaotic. Here, by the way, this is our standard HODL waves, BTC denomination. Here's all the Satoshi and early miners. See how it takes up a large portion of the chart? It's because they hold millions of BTC, but the value is nothing. If they spend it, obviously that coin will be revalued higher, become hot, and then the whole thing kind of self-corrects. But you can also see that the hot supply has a general drift to the downside as a result. It's getting squeezed by the large volume of older coins. It's why I find the realized cap HODL waves just a little bit more useful. Now, there was a couple of charts I wanted to look at here. Let me just try and find the one. Actually, no, I didn't want to look at this because I thought I covered that in the previous one. So the last thing I want to touch on is sell-side risk ratio. Now, this is a funky looking metric, but it's a really, really useful one to help us gauge where we are. So the big picture takeaway that we've kind of got so far is that there's a lot more activity going on. Globally, the world's kind of waking up and being like, oh, maybe this Bitcoin thing does still make sense. And it hasn't really died again. So you've got that component. You've got people just, frankly, they're still buying, right? There's just not selling. There's just not a lot of sell side pressure. So the last thing to say is that that's all on like a coin movement perspective. But if we look at it from a realized perspective, of the coins that are moving, where are they coming from? Are they coming from much lower and they're realizing a profit? Are they people capitulating from the top and like finally just saying, get me the hell out of this thing? What the sell side risk ratio does is it looks at all of the realized value, all the realized profit and all the realized loss, adds them together. And it's basically comparing that to the market size, or in this case, the realized cap. So think about this. It's basically how much value is Bitcoin changing by versus how big it is. So low values means that there's not much value change. The realized cap isn't moving around very much. The realized cap's pretty flat, actually. So there's not much direction. Like the coins that are moving are mostly from a price that's pretty close to where we currently are, right? They're kind of chopping around. There's not really like big profits and big losses. It's all pretty static. So you'll see here that bull market tops, again, when all that hot money is coming in, the old money is spending, and the old money comes from much cheaper prices. Big profits, large volume, top heavy markets, bull market top, right? So you see maximum value realization during bulls, certainly on a sustained basis. We also see periods like little peaks around capitulation style events and local tops. So it's like a bit of a volatility indicator. It's showing you when there's lots of value getting flushed out of the system. Happens at local tops, happens at local bottoms, happens at global bottoms. But generally speaking, we get these enormous peaks during bull markets. We're only just getting up off it. Again, these horizontal lines are arbitrary, but we're really only just getting off the lows. And again, it kind of shows you that most coins that are on the move are coming from around the 30,000 mark, right? Plus or minus a few percent. There's not much coming from higher above and higher below, or far below. So very, very neutral across the entire board. Kind of shows you that people just aren't willing to sell. So thus low sell side risk ratio. If we look at it from the long-term holder perspective, again, long-term holders tend to be really, really cyclical. And you can see here that tops, much, much easier to use this metric. Bottoms are a long, slow, choppy process. You can see we're pretty much only just coming off the lows. So long-term holders, for the most part, sitting tight, doing very, very, very little, which is, kind of what you want to see. And the last one is short-term holders, obviously. Now, as you can expect, because this is kind of the hot ball of money following price, this one here is obviously a lot more volatile and a lot better at spotting kind of extremes in both directions. March 2020 stands out here where we get these extremely high periods of value realization. Really good to look for pivot points. Now, these very low values, right, generally signify that we have a period of volatility coming. We've bounced off the bottom. Short-term holders are the dominant cohort in the market right now. Long-term holders are very, very flat across the board. It really is the short-term holders driving a lot of this stuff. We have seen an uptick in inflows to exchanges, but we've also seen an even bigger outflow from exchanges. And I'm not a huge fan of using that as like direct buy and sell side demand. But at the same time, at the moment, it doesn't really look like there's any kind of major sell side that I'm seeing just yet. So in many ways, we're kind of in a very, very low and quiet period, even though it's price is literally trading sideways. It's barely giving anything back in this current consolidation. So I do just have to maintain an upwards bias. It still feels quite constructive and quite healthy. And I'm not really seeing any kind of oversaturation, over panic. You can see here these large periods of realized value on the way up. This is kind of the 2016 equivalent to where we are. These very high periods is kind of saying that they're taking big profits, right? They're actually taking money out of the market, and that oversaturates it, even if just temporarily, right? And the higher these things go, the more the value is being realized and locked in. So we are some distance away from that. So really, there's probably two signals to take away from this. At the moment, everything still looks like respect the trend, right? The trend appears to be up, respect the trend. If we do not get any kind of upside momentum here, the takeaway from this is that there's not much sell side and we still couldn't push through, which tells you there may well be a problem with the demand side, right? And again, it's a bit of an imprecise measure, but just trying to understand the direction in both of these things. If we don't get a strong push higher from this current 30,000 level, it would probably suggest that there's just not enough demand coming in. And it may actually mean that we do, in fact, need to just go through a bit of a correction and consolidation, especially considering we bounce back up here. This is kind of the second attempt. You don't really want to fluff your second attempt. So that's my kind of big picture takeaway. So anyway, hopefully that's a useful session. Let me know if you have any comments or questions, and I will see you in the next one. Cheers.